Hi, so you're growing your team and you're wondering now, how can I structure a relationship with a partner? Is there the ability to create a partnership, a corporate entity? Maybe you want to give profit sharing or equity to some of your team agents. How can you do that? Hi, my name is Thomas Hyman, and in today's episode, I'm going to cover exactly that. LLC planning and structuring of entities for teams. So this is something that is of interest for successful, large, growing teams. So if you have an established team with 3, 4, 5, 6 team members and you're growing, maybe you're looking to build an expansion team, this is going to walk you through a type of structure that you can set up to actually formalize your team as a quasi-corporate entity. Now, in the state of Florida, obviously, you must have a brokerage entity if you want to have an LLC that does business as a licensee other than your PLLC for the individual agent. So you cannot set up, XYZ Team LLC and then have that LLC do business as a real estate licensee unless that LLC was actually structured as a corporation, licensed as a corporation. You basically would have to start your own corporation. But there is a way that smart entrepreneurs and successful teams structure themselves as an entity primarily for tax and profit sharing purposes, which will give them the ability to create partnerships, to expand into new markets, to tie their team agents, team members into the success of the team, and then also derive some tax advantages. And if you're partnering with someone, this can also be a great opportunity for you to structure the entity in a way that recognizes the amount of money that is being contributed in terms of revenue by each partner. So you can have a partnership that is 50-50, where each of you has a 50% stake in the company, so to speak, but the paid-in capital could be different. If you contribute $100,000 this year and your partner contributes $150,000 this year, then your capital account would reflect that 100, and his or her would reflect 150, and maybe next year is going to change. Or you can just have a membership agreement, an operating agreement within the LLC that will define your actual percentage owned based on the money contributed. The wonderful thing about an LLC is that you have almost unlimited flexibility in terms of how you can structure it. Now I'm going to walk you through this, and I'm doing this from my home office so I can actually record my screen and give you a visual of this. Now, this is something where you definitely want to consult with a competent attorney and accountant to structure this. So this is not something you want to just do it yourself. If you need to get a referral for an attorney that specializes in these type of structures, please comment me. I'll be happy to send you some information. There are some great attorneys that specifically specialize on the real estate industry and that know exactly how to structure these type of entities. There are not a lot of teams that utilize these type of entities because there are not a lot of true, large, growing teams. Most teams are just, one person with a buyer agent or an assistant or husband, wife, working as a team. And there really is no need to have this type of formal structure. But if you're looking to grow a team, have some partners in other markets, maybe build an expansion team. Imagine you have a team where you have a partner in Orlando, one in Miami, one in Tampa, one in Sarasota, one in Naples, and you all work together under one team umbrella. How can you make that happen when each of you really is licensed as an agent with their brokerage? And this structure here, by the way, you could actually have a team structured where 2, 3, 4 people are with different brokerages working together as a team. So you could literally, let's say you're an agent with Remax in Tampa, you could build that team organization and have a agent with, let's say KW in Miami, and the two of you work together as a team. Now, it's going to be a structure for tax purposes and ownership only. You would still each individually be working as a individual agent in that scenario. So when it comes to teams, and this is specifically for the state of Florida, there are structures also called groups. So now as a agent, you can team up with other agents and have a group or have a team which previously was not recognized. So this is something new that just went into effect last summer. And for the first time, you can actually use a fictitious name for your group. And There are some words that cannot be used, so you cannot use realty, for example, in your name. You cannot be, the Suncoast Realty, that wouldn't work. But you could be the Suncoast Home Group or Home Team. So there are words that you can use. You can have a fictitious name, and then the leader of the group, there has to be a designated agent that is responsible for the group. He or she has to report to their broker monthly who are the members on his or her group or team, etc., etc., etc. So there are some requirements, and then in the marketing, obviously the group has to identify themselves as a group affiliated with their broker. So looking at the team or group, according to Florida Statute 475 as it pertains to real estate licensee, that would have to be within the same brokerage. So you cannot have a group that has agents from Keller Williams and Remax and Coldwell Banker and someone else working together as a group. That would not work. But you can create this LLC structure, in theory at least, with agents that are with other companies. Let's say you want to expand to another state, you could do that too. And your company is not in that state, obviously, so you would have the ability to do that. So I'm going to walk you through that. And this is not the group under FS 475 where you have the designated realtor that is the leader of the group. This is a business structure specifically for tax purposes, and I'm going to talk about the why. Why would you want to do that in a minute? So when we look at structuring a team as an LLC, as I said, you cannot do business as an LLC in the marketplace unless you are a brokerage. So if your LLC is licensed as a brokerage and has a broker of record, qualifying broker, then you can obviously do business as that LLC. So in this particular case, this XYZ Group LLC is not licensed as a brokerage. This is simply an entity that is created to solidify the partnership without having a partnership agreement, because there's a lot of liability associated with that. Instead, you use a limited liability company as a vehicle. And so XYZ Group LLC would have 2 or more members. So the owners of an LLC are called members. And personally, my recommendation would be probably, and I'm sure when you talk to an attorney, they will say the same thing, that you may want to have your PLLC, so your personal license, you should have it in an LLC, PLLC, or PA, and have that entity be the member or shareholder of XYZ Group LLC. And you obviously have to fund this LLC, so each member could make a capital contribution. You can say, okay, we're going to set this up now. We're each going to put $1,000 or $5,000 into the company business account for XYZ Group LLC. Or you could just contribute your revenue from the deals, and you can say, okay, whenever we have a closing, we're going to turn around and deposit that amount of money into my personal LLC account, but then I'm going to cut a check out to the group LLC, and we're going to treat that as a capital contribution. Now, when it comes to structuring this LLC, there are really 2 ways you can do it from a 30,000 foot view. You could say, okay, we're going to contribute our commissions as capital into the LLC. If you do that, then obviously you personally have the income when you get that commission check. Contributing capital to the LLC is not a tax deductible event, but the LLC then in essence would be running a loss, and you would get the loss contribution, your share of the expenses, which is going to reduce your taxable income. So that would be one way to structure it. Another way would be that when you have a closing and you get a check for $12,135, that the LLC basically invoices you for that amount. You pay the LLC. So now you have an expense that is equal to the income that you had. So basically you would have 0 income at your PLLC, and the income gets transferred into the group LLC, and now the expenses are worked against that. Now in that type of scenario, obviously the LLC is going to have a profit. Now at the end of the year, an LLC, and this LLC will be taxed as a partnership, the LLC will issue a K-1 to each member. And again, there's a tremendous amount of flexibility. You decide what the payout is. You can have a member that invests and pays in $100,000 and only gets 5%, and you can have another member that invests $100 and gets 95%. So there's complete flexibility in terms of how the ownership is structured and how the profit allocation is structured. So you could even have a structure where each party owns 50%, but the profit distribution or loss distribution is based on a different percentage. So, but the advantage of getting your income in form of a K1 in this type of scenario is that that partnership income in most cases if structured properly is not going to be subject to self-employment tax. So you're going to have a huge tax benefit right there. And of course, all of the expenditures that you would have, office, rent, marketing, etc., 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 would all be run through XYZ Group LLC. And if you're smart, you would enter into any contracts through XYZ Group LLC. If you're going to hire an assistant, XYZ Group LLC would be the employer of that assistant, and that will reduce your personal liability tremendously, obviously. And you could even put yourself on the payroll. So you could have a structure where instead of being an employee of your PLLC, if your PLLC is run completely revenue neutral, you could just be an employee of the group LLC instead. So there are no limitations as to what you can do. The most exciting thing with this type of structure, and the reason why you would want to do it, is number one, you can have a solid legal agreement with another person. If you decide, you're a successful agent and there's another successful agent, let's join forces, okay? You're both independent contractors of the brokerage. Whether you individually do business as a sole proprietor or PA or LLC makes absolutely no difference, but you're two separate business people with your broker, and so you're now deciding to work together, and you don't have any legal structure to do that. And if you just write up a simple agreement that says, we're going to form a partnership and work together as partners, now you're actually forming, in essence, a general partnership, which could expose you to tremendous liability. In a partnership, each partner is liable for everything that the other partner does. So it would make a huge amount of sense to set up a group LLC, even if it's just you and one other person, and solidify through an agreement who does what, who gets paid what the profit distribution is at the end of the year, etc., etc., etc. Now, the thing that's most exciting to me, and those of you that know me know that I'm a huge believer in profit sharing and incentivizing your team and rewarding your team for value that they produce through equity ownership. So what you can actually do is you could have a team or a group LLC structured where you can now create incentives for your team member agents to become shareholders or members in your group LLC. And you can do that either, if you achieve certain milestones, benchmarks, you're going to get some membership units or percentage in the LLC. You can do it with a buy-in. If you achieve a certain milestone, you generate X revenue for the company, then we're going to give you the opportunity. We're going to value the group and see how much it's worth. And if you're going to get X percent, it's worth this much money. You get a buy-in, and we're going to do it through a deduction from closing transactions that you have. It ties someone into your group, into your team, into your organization. They're going to have an ownership interest, and it prevents them from running off and starting their own thing. Many times you build a team, you have a super successful team agent, and they figure out at some point, why am I doing this on a 50-50 split? I can do this myself. They understand the dynamics, the structure behind it, and if they're an entrepreneurial person, they might decide to just strike out on their own. It wouldn't be great if you could offer them a partnership in your team instead. So structuring a team as an LLC can have a lot of benefits. Again, solidifying your quote-unquote partnership with the other agent that you partner up with. Obviously, if you're the only team leader and you don't have another owner of the team, then you don't have to worry about that. But if you want to have partners in your team, this is the way to structure it. It'll give you a lot of flexibility when you go and expand into other markets. If you're a super successful team, you could even have someone make a buy-in into your team to become part of your group. And if you do that, obviously you want to talk to an attorney, because now we're, touching on security laws and offering securities. So you'll be very, very careful with that. But you have that flexibility that you simply don't have if you're just doing a haphazard expansion type of agreement. And then number 3, again, you can tie in your team members, your team agents, and give them a piece of the pie, an incentive of ownership, which you can have subject to vesting and what have you not. And then last but not least, if you really become super successful, you could at any time decide to convert your group into a brokerage and just formalize the whole thing at that point, and then potentially have something that you can sell. Now, in order for that to work, you really would have to have an organization that runs totally independent of you. It has to be a machine that runs, but it gives you an exit strategy. So I hope this gives you some food for thought. And if you like this kind of content, obviously please subscribe. Please like this video, and I would love to hear from you. Please give me your thoughts, your questions, and let me know if there's something that you have been wondering about when it comes to structuring a team. And again, there's no one-size-fits-all solution. When it comes to something complex like this, you absolutely, positively want to have tax and legal advice. Don't go this on your own. An attorney that represents himself has a fool for a client, so don't do it. You're setting up a business, go about it the right way. And if you want some referrals, please let me know. I'll be happy to post some names. So look forward to your comments, and thank you so much for taking the time to tune in. And I'm looking forward to doing some additional trainings that are team related down the road, related to technology and things you can do to streamline your team as you grow and succeed. Thanks so much. I'm Thomas Hyman, and we'll talk soon.